Welcome to this video today, which is all about Forex money management and risk control rules for beginners. Now, what I'm going to be doing today is chatting with successful Norwegian Forex trader Håkon Fuglas. Now, he was on the channel last week. He's been featured in the Norwegian Financial Times at the age of just 19. He was trading 2.5 million on the eToro trading platform. In under 8 months, he produced profits of 85%. And that's the equivalent of 100% annualized. And he had very little drawdown. Now, I just want to talk with him about the techniques and rules that he uses, and anyone can learn them. Okay, so we'll just be going through the basic rules and techniques that can help you not just restrict drawdown, but also maximize your profits as well. Now, in relation to Håkon, if you want some Forex education and you're a beginner, click on his link beneath this video, and also join our free mailing list for updates on the best strategies and best techniques as well. Now, what we'll do is we'll go and chat to Håkon. Good morning, Håkon. Thank you for joining us.
Hello, Andrew. No problem.
Now, today I thought we'd talk about money management. We know, obviously, that every successful trading strategy, no matter what type of trading it is, has to have good money management. Okay. Now, I think beginners perhaps neglect the area of money management when they come in the markets. And what I really want to do is just obviously chat with you about basic money management rules that you use. And in terms of your performance, before I ask you the questions, in under a year, when you were at eToro, you had an 85% growth rate with a 22% drawdown, i.e. peak to valley, which was in a period of just under a year, wasn't it?
Yeah, something like that, yeah.
So just under a year. So it's a highly respectable performance to drawdown. Now, in terms of just my first question, actually, I just want to see if you agree with this. Most traders, when they come to the markets, they focus really on the entry. They don't give the stop as much thought. I would actually say that the stop is as important, or it could actually be, in my view, more important than the entry. Now, what would you say to that?
I totally agree, and in my opinion, the stop is much more important really than the entry or the profit. The stop is basically where you control your risk. So it's very important to be aware what kind of risk you have on a trade before you place it. And to use a stop loss is really kind of one of those things in trading that's necessary to succeed. So, stop loss is very important, and in my opinion, you should always place a physical stop loss as opposed to a mental stop loss. Mental stop loss is basically you just have a level in your mind that if the market goes there, you get out. Whereas a physical stop loss, you place it in your trading platform, and the platform takes you out of that level. So always a physical stop loss, never a mental one, is my belief.
Yeah, I think actually, in terms of mental stop losses, I think the majority of traders who actually have a mental stop loss really don't deep down intend executing the stop loss. So just move it back and create themselves a bigger hole. So I agree with you. You've got to have the stops in the market straight away. The only thing you can control in Forex is your risk. You've got no idea what the profit is going to be.
Exactly.
I mean, you hope it's going to be good, but it's best to look at the worst eventuality first. So stops in the market there. Question number 3. How much do you risk per trade?
It kind of depends, really. It depends on what kind of setup I'm looking at in the market, and it also kind of depends on my performance. If I'm doing well, I tend to risk more, whereas if I'm doing bad, I tend to risk less. So normally I have a risk between 0.5% up to 3% per trade.
Okay, so 0.5%, that's quite a small percentage. But I think it's worth stressing for beginners that if you want to survive and prosper in the Forex markets, you can make a lot of money with relatively low risk. Well, I say relatively low risk, you know what I mean, in
Yeah,
inverted commas, but 0.5% to 3% is plenty on a trade.
absolutely. And what people, need to pay attention to is basically the risk reward on your trades. Let's say if I see a setup on a currency pair and I have a risk of 0.5%, but my profit is 3 times as high as my risk. So I can afford to lose many trades if I have that low risk. And, if I, win my trades, I tend to do quite well. So I think people need to understand that you can do quite well using that low percentages also.
Okay, now in terms of risk per trade, 0.5% to 3%, let's say, but how many trades would you have on, and how much would be your total risk to account? So if everything went wrong, how much would you lose, the maximum?
I basically have a rule that if I lose all my trade, every one of my trades go to stop loss. I will not lose more than 10%. So I have kind of a portfolio risk at 10%. So I usually have, how many trades I have open really depends on how the market is. If there is a quiet market, I have less. If there are, very volatile markets, lot of opportunities, I tend to have more. But in the end, I don't risk more than 10% total. And I also pay attention to correlations in the market. For example, if I trade the Norwegian krona, I would probably not trade the Canadian dollar as well, because both of those currencies very correlated to the oil price. So if one trade goes wrong, the other would probably also go wrong. So I try to keep an eye on different correlations as well.
Okay, so basically each day you know what your worst eventuality is.
Yeah,
Yeah, I think a lot of traders don't work that out. And you get some event come in unexpected, and then the account is gone. Okay, because they
yeah,
just haven't calculated the worst eventuality that they're comfortable with. Okay,
yeah.
now in terms of you're in a period of drawdown. Yeah, you hit your 10%. Do you ever take a break from trading?
Many times. Basically, when I'm losing in trading, first of all, I'm not trading good because I'm losing. And another thing is my confidence is really low when I'm losing as well. So for me, it's not a good idea to take any risk really when I'm in a losing period. And in most cases, the best thing to do really is to just take a break and clear your head and come back to the markets when you're ready and focused again.
Yeah.
Yeah,
Yeah, no. I was just going to say there actually that a lot of beginners coming in the markets think if you're an experienced trader,
yeah,
then you should just be thinking the same all the time, even in a losing period. Now, from my trading experience, something changes when you're taking loss after loss,
yeah,
and you do have a dip in confidence, or a different type of focus, the wrong focus, let's say.
yeah,
So I think that happens to all traders, no matter how long they've traded. And I think if you carry on trading in a drawdown period, there's chances probably you might revenge trade. Do you think?
definitely. And it's not a revenge trading. It can work, in a very short amount of time, but in the long run, revenge trading is something you should never do. You should never really increase your risk when you're losing. The best way is to make back the losses in a very controlled manner and do it in small bits instead of trying to make it back right away.
Yeah, I think if you try and come back too quickly, you just dig yourself a bigger hole.
Exactly.
I mean, you might be lucky once or twice, but the market will eventually catch you.
Exactly.
And just I think I'm just going to stress this. I just thought it's the further you fall behind, the more work you've got to do to get back.
Exactly.
So if you're 50% down, you've got to get 100% to get back to where you were. So it's best to be not too far behind. Next question. What pairs do you look at to trade?
I look at many different pairs, probably like 30 to 40 pairs a day. I really think that traders should trade more pairs. I see many traders just trading a couple of pairs like the euro dollar and the dollar yen. And, it may be a good idea, but if you look at more pairs, you will find more risk reward setups. For example, the euro dollar may trend sideways for maybe 6 months. And if you're just trading the euro dollar, you're just forcing trade. I think it's better to look at many different kind of pairs and choose the pairs with the best risk reward, basically.
Yeah, no, I agree with that. I think traders get obsessed, or many traders do, with just trading the majors.
Yeah.
And they think some of the other pairs, or they've got a wider pip stop loss, so I won't trade it,
Yeah.
But I agree with you that the more pairs you look at, and if you're trading longer term, the pip spreads very often don't matter.
Yeah.
So what was my next question? Okay, when you put your trade in the market,
Yeah.
you obviously offset it with a stop loss. How do you decide where the stop loss is going to be?
It's if the market, for example, is at a double top or a triple top, the natural place to place my stop loss would be right above the previous top. The problem with that is all the other traders are doing the same. So I try to have a bit wider stop and try to place my stops kind of in a hard way to get. And I usually have a stop loss of maybe 100 to, between 80 to 100 pips. And I try to place it in places where I don't try to place it where everyone else is placing it. I try to place it in a place where it's hard to get.
So basically a little bit further back.
Yeah.
Yeah. No, I mean I've said this in videos as well, that traders tend to put stops in obvious places.
Yeah.
And they all tend to do the same. And they just get taken out. Okay.
Yeah.
As a stop cluster. Now a lot of traders, you can see a lot of this online, blame brokers for stop hunting. Do you think brokers hunt stops?
If the broker is regulated, I highly doubt it. I think it's more like the big players in the market, like the big banks and hedge funds that are kind of pushing the market through those levels and create some sort of false breakouts. And I don't think it's the brokers. If you have a unregulated broker, I don't know, but I don't think the regulated ones do that. I think it's more the banks and hedge funds that are pushing the market up.
No, I'd agree with that as well, because I think hedge funds, bank funds or bank traders know where the stops are.
Yeah, exactly.
So they will try and get them, so to speak. That was my experience as a broker. Okay.
Yeah.
We were brokers, but we never bothered hunting stops, because the trader is going to lose on his own anyway most of the time.
Exactly.
So it doesn't really come into a broker's mentality. Now, in terms of, you got the trade in motion, yeah?
Yeah.
It hasn't stopped you out, and you've moved into profit.
Yeah.
How do you move your stops?
I try to move it when the market is going through, important support lines, for example. So I kind of move it into further profit as we are breaking important levels.
Okay, so let's say, just to clarify, if you broke a significant level of support, yeah?
Yeah.
You bring your stop in behind that level of support.
Exactly.
But not too close.
Exactly.
Okay, now, in terms of your trades in taking profit, so they mostly taken with a trailing stop, or do you just come out at target Do you have set targets, or do you?
I have set targets, but as I said, I try to kind of move the stop loss into further profits, so that I kind of secure some of the profits on the way. But best case scenario, it goes all the way to my initial profit area.
Okay, so when it hits the profit area, you're out. Otherwise, it's out on a trailing stop. Yeah.
Yeah.
Okay. Now, in terms of obviously beginners coming in the markets, what advice would you give them in terms of dealing with money management and dealing with losses?
Well, the first thing beginners really need to understand is that losses is just a part of trading, and everyone take losses, and you just have to kind of get used to it, and you have to understand really how important risk management is. It's just one of those things that are, you know, boring to learn or boring to pay attention to, but it's just necessary. And if you don't practice correct risk management, you will never become a successful trader, I believe. And treat your trading as a business. And as with most businesses, you have overhead, and just treat your losses as a overhead, basically, and take it seriously. And I think you will, you know, increase your odds by succeeding the moment you decide to take the risk management part more serious.
I think that's a good point, actually, because, yeah, Forex trading is a business.
Yeah.
It's a competitive business. Yeah, any business is going to have, like you say, an overhead, like, you know, I don't know, heating, lighting, staff. The aim is just to keep the overhead small.
Yes, exactly.
And then obviously, you know, whatever services the business does, you know, hopefully is going to do more profit than the overhead. I think in terms of Forex trading, you know, I mean, the way I see it is that, yeah, I kind of view losses as the way to profits, providing I keep them small.
Yeah, and you know, it's as I said, it's just one of those things that you know, it's a part of trading, and you have to get used to it. Uh, the faster you get used to it, and the faster you understand how important risk management is, the faster you become successful, I believe.
I think I totally agree with you on that. Okay, that was all my questions.
Fantastic.
So thank you very much for joining us. We'll speak obviously again soon.
Yes.
Have a great day. Thanks again.
No problem.